Hello and welcome to the look ahead for Tuesday, the 13th of May with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow we'll be watching out for UK jobs data. We've also got German ZEW economic sentiment and then US inflation in the US session. So just starting off with UK jobs data, we're expecting to see unemployment tick slightly higher to 4.5%, up from 4.4%. Also going to be watching very closely average earnings. Expected to, including bonuses, is expected to fall to 5.2%, down from 5.6%, and excluding bonus, is expected to fall to 5.7%, down from 5.9%. Now, I think this data is going to be watched relatively closely because we're starting to get a sense now of the impact of the labour market. The Labour government's budget in October, whereas from April they were going to be increasing the minimum wage, but also the tax burden for employers. Now, this jobs data is relating to March. The unemployment levels is relating to March. So we're just getting sort of a sense of what might have been happening in the labour market ahead of that implementation of those measures the month posterior. So we'd had sort of plenty of industry level data sort of suggesting, and anecdotal data suggesting that that there was some weakening, there were hiring freezes going on, but that wasn't yet showing up in any of this labour market hard data, just because of the lag time involved in the data being released to the events that are actually happening. So might get a sense of that weakening. Now, obviously, the Bank of England is looking at wage growth very closely. Even today, we had Bank of England policymaker, Deputy Governor Claire Lambertelli, warning that inflationary risks are still present, particularly with concerns to wage growth, which isn't consistent with 2% inflation target at the levels that it is. So the Bank of England is wanting to see UK wage growth slow. It's intrinsically linked to service sector inflation. They want to see that cooling before really feeling more confident about cutting rates more aggressively. That's the domestic issues going on. Obviously, then there's the impact of trade tariffs on what's happening there. We've seen a softening stance as far as Trump is concerned after the trade or the agreement with China over the weekend. However, universal 10% tariff looks like it's here to stay on many goods and services from many countries across the globe. But we do also have US inflation as well. So US inflation is expected to stay steady at 2.4% after cooling from 2.8% in the previous month. Core inflation is also expected to cool. Interestingly, though, we have heard from Federal Reserve Chair Jerome Powell last week at the FOMC meeting, who warned over the prospect of higher inflation owing to trade tariffs. So he also warned over prospect of higher unemployment. But given that we seem to have moved away from worst case scenario, we have seen a strengthening in the US dollar, which is what we've seen with this sell-off in GBP USD today. Now looking ahead, we could see potentially a continuation of that US dollar strengthening on optimism surrounding sort of the trade scenario in the US. And in which case, then we could see the pound US dollar fall lower. Currently, the low of the day it's recovered from, that was down at 131.40 from this range that it had been trading in, a relatively tight range. Excuse me. If we just sort of focus in on there, we can see it had been tiding in a relatively tight range for a period of time, broken down out of that 132.50 on the downside. Now we're looking at the 132.100 as the next support level. If we get a break below that, then brings 131 into play as well. If we get weaker than expected UK data, that could obviously pull the pound lower, and if we get hotter than expected US inflation. However, weaker US inflation could do the job as to giving this pair a little bit of a boost, in which case watch on the upside for a break above 133.40 is what's needed to really extend gains towards that 135 level. Also just having a look here at Euro US dollar. Euro US dollar. Euro has fallen sharply today, largest daily decline so far this year. This is on the back of the unwinding of that safe haven euro trade because of the easing of US trade fears as China and the US agree to pause the or reduce tariffs to pre-Liberation Day levels, at least for the next 90 days. So see what's going to be happening there. As far as this level's concerned, we're just watching down here. 111 seems to be the level on the downside that's offering support. Obviously, we've got ZEW economic sentiment tomorrow is expected to improve considerably from -14 to 13.7. So strong data could offer a little bit of support to the Euro US dollar, but I feel that this could be continue unwinding of that safe haven euro trade that we had seen. If we see the US dollar continuing to strengthen, in which case the levels we're watching after that would be the 110 round number and 109.40. On the upside, any move above 112 would be a sort of a steadying, but we'd need a move above 112.80, 175 to really negate that near-term sell-off. And then just finally, USD Japanese yen. And this, again, we've seen a really big move here, just coming into that resistance that we were expecting it to watch out for at 148.60. It's broken out of the declining channel, which it's been trading in since the start of the year. Looking really for a move above this level here, 148.60, and the 200 SMA at 150, or just below 150 at 149.50. And the 150 level in order for buyers to gain momentum. As far as support is concerned, support on the downside, 146.20. That's the area that we've been watching. That was the high just at the beginning of May. And if we get a break below there, then watch out for 143.50. As I said, US inflation will be driving this, as well as trade developments and sentiment surrounding trade. I hope you liked everything that we have watched. And if you have, then please do give this video a like. And for more videos like this, then please do subscribe.